Webinar has started.
Sure. So, good evening, everyone, and a warm welcome to each one of you on today's webinar on market outlook and fund update. My name is Saju Kallupurayidam, product manager, mutual fund at HDFC Securities. So, to help us today with the market outlook, we have Shibani Kurian, equity fund manager at Kotak Mahindra Asset Management Company. Just to give you a brief background about Shibani, she has been associated with Kotak AMC since 2007, and her key responsibility includes equity fund management and heading the equity research team. And prior to working with Kotak, she has also worked with UTI AMC. And about the education background, she holds a PG DM in finance and a BSc honors in economics. So over to you, Shibani. It has been an eventful week. I'm sure every week there is a surprise. So I know everybody is glued into what we have to look forward, and the fund followed by the fund update.
Thank you so much, and good evening, everyone. So clearly, not just this week, but this year, if I might say so, in 2025, we have seen markets being considerably volatile. तो हर महीना हर हफ्ते we have been seeing कुछ ना कुछ news flow या developments जो हमारे markets को impact कर रहे हैं. So if you look at overall India, our belief is that India has been somewhat of an oasis in the desert. India के macro parameters काफी strong रहे हैं. पर इसके बावजूद, because of the news flow, especially around trade and tariff, if you look at calendar year to date, which is in 2025, Indian markets have actually underperformed emerging markets. And as we go along, we will discuss both global as well as domestic factors and where do markets stand today and what's the outlook. So to start off with, sorry, just give me a minute. So let's talk about the global economy. Now, what is clearly happening from a growth perspective is that the growth globally is coming down, and therefore global economy is set for a slowdown as far as calendar year 2025 is concerned. तो ये जो projections हम देख रहे हैं वो IMF के projections है for 2025 and 26, ये calendar year के projections है, और यहाँ पे clearly the economy which is slowing down significantly is the US economy, which is slowing down from 2.8% to about 1.9% in terms of GDP growth, which is a slowdown which is considerable. Now here, if you look at India, India clearly is showing strength with GDP projections for both 2025 and 26 remaining largely flat at about 6.4% to 6.5%. So इसका मतलब है कि इंडिया में ग्रोथ आउटलुक काफी स्ट्रॉन्ग है, और यहाँ पे डिस्पाइट ग्लोबल volatility, growth has remained largely stable. Now, in this context, when you look at consumer sentiment and corporate outlook, ये US के consumer sentiment and outlook है, और यहाँ पे आपको दिखेगा कि हर segment में across income groups there has been a sharp decline in terms of consumer sentiment and corporate outlook. And because there is uncertainty, that uncertainty is also filtering into what is happening in Indian equity markets as well. I think the big issue as to why we are seeing a lot of discussion on trade and tariff today is this chart. So this chart shows you that the US government is paying more than $1 trillion annually as interest cost for servicing their debt. यानी कि यूएस में फिस्कल डेफिसिट इतना हाई है कि उनके इंटरेस्ट बर्डन $1 ट्रिलियन से भी ज्यादा एनुअल बेसिस पे है, जिसके कारण you have to see higher tariffs to offset this kind of high fiscal burden. And I think that is what the whole debate about trade and tariff is all around. Now, whatever be the final tariff rate, today we don't know even for India what is going to be the tariff rate, but clearly the effective tariff is likely to be higher than what it was. So far, if you look at US, the effective tariff rate has been about 2 to 3%. And that is likely to settle maybe anywhere in the range of say 20-25%, And therefore, the world, including India, will have to grapple with higher tariff as far as the US is concerned. Now, इंडिया में टैरिफ का फाइनल जो आउटकम है वो आज भी हमें पता नहीं है। तो अभी जो टाइम दिया गया है वो अगस्त 27 तक है, जो कि अगले हफ्ते है। पर उसके बाद एक्चुअल टैरिफ रेट फाइनली कहाँ पे सेटल होगा इंडिया के लिए, ये काफी अनसर्टन है। एंड दैट अनसर्टनिटी इज क्लियरली being seen in the markets this week as well as over the last few months as well. Now, the other issue on growth, as I said, globally growth is slowing down. One large economy, which is US, has slowed down, and the other economy that is slowing down is clearly China. चाइना में एक समय था जहां पे 7 to 10% ग्रोथ रेट्स हुए करते थे, पर अभी नाउ द ग्रोथ रेट हैज कम डाउन टू अबाउट 5%, एंड इन फैक्ट there are debates that China's potential growth can actually be below 5%. So therefore, two large economies of the world, US and China, इन दोनों इकोनॉमीज में हम देख रहे हैं कि ग्रोथ काफी नीचे आ गए हैं लॉन्ग टर्म एवरेजेस के हिसाब से, and that is resulting in the overall demand slowdown from a global perspective. चाइना में एक और प्रॉब्लम है कि चाइना हैज बीन अ इन्वेस्टमेंट लेड इकोनॉमी and it is unable to shift away from investments towards consumption. And therefore, if you look at the share of consumption for China in terms of GDP, the share of consumption has remained flat over the last decade. And therefore, despite the government in China पॉलिसी मेजर्स के हिसाब से उन्होंने काफी ट्राई किया है कंजम्पशन बूस्ट करने के लिए, पर वो कंजम्पशन बूस्ट आज भी नहीं हो रही है। इसके कारण जो इन्वेस्टमेंट लेड ग्रोथ मॉडल था चाइना का, वो इन्वेस्टमेंट लेड ग्रोथ मॉडल में हमने ब्रेक डाउन देखा है, और जिसके कारण जैसे हम पिछले चार्ट में देख रहे थे कि वहां पे भी ग्रोथ काफी स्लो हो चुकी है। और एक और सरप्राइजिंग बात है कि China's share of exports to the US and Europe as well as Japan, which is the developed countries, that is the blue line. And the share of China's exports to US, Europe, and Japan have been coming down very steadily over the last decade. And the share of exports of China to the rest of the world has been going up. And this has implications for India as well, because China has been dumping in the rest of the world and bringing down prices. And that has impacted many of our goods exports in various sectors. And therefore, this is something that we need to watch out for. Now, with this economy and in the global backdrop, the question for India is that are we really holding up well, and are we an oasis in the desert? इंडियन इकोनॉमी ग्रोथ हिसाब से तो आपने देखा ही है कि ग्रोथ हैज बीन होल्डिंग अप वेल। इनफैक्ट यू नो दैट इंडिया हैज ओवरटेकन जापान टू बिकम द फोर्थ लार्जेस्ट इकोनॉमी इन द वर्ल्ड, एंड देयरफॉर ग्रोथ फॉर इंडिया फ्रॉम अ जीडीपी परस्पेक्टिव हैज बीन होल्डिंग अप। इंडिया में एक और फैक्टर हमारे लिए बहुत इंपॉर्टेंट है, वो है मॉनसून्स, एंड सो फार ऑल इंडिया रेनफॉल हैज रिमेन्ड अबव नॉर्मल, एंड दैट मीन्स दैट रूरल इकोनॉमी पे जो इम्पैक्ट है वो काफी पॉजिटिव है। काफी सालों बाद हम देख रहे हैं कि रूरल इकोनॉमी में इम्प्रूवमेंट आ रही है और डिमांड इम्प्रूवमेंट काफी आ रही है। एक और डेटा पॉइंट हम देखते हैं वो है कि वाटर रेजर्वॉयर, जो डैम में वाटर रेजर्वॉयर लेवल्स है, वो लेवल्स पिछले साल के हिसाब से काफी इम्प्रूवमेंट हम देख रहे हैं, एंड इसका इम्पैक्ट अगेन पॉजिटिव इम्पैक्ट विंटर क्रॉप पे है, जो कि रबी क्रॉप है। अभी तक जो फूड ग्रेन आउटपुट है, विच इज द खरीफ क्रॉप, द खरीफ सोइंग हैज एक्चुअली बीन एक्सट्रीमली गुड। In fact, in three segments, which is food grain, cereals, and pulses, which are the key kharif crops, there has been a significant improvement on a YOY basis. And with water reservoir levels being full, and as you know that all the dams are more or less full given the rainfall that we have seen, it means that there is a very high probability that the rabi crop or the winter crop will also be a good crop. So all that means is that the rural economy is set for a bounce. The other fact that we keep discussing is government capex. In fact, in the first 3 months of this fiscal year, I beg your pardon, government capex has grown at about 35%. So on a rolling 6-month basis, government capex has surged to an all-time high of almost 7.5 trillion rupees. So therefore, government, despite all that we are discussing, कि fiscal deficit के कारण capex slow down हुआ है, but जो government spending आज भी नंबर्स देखें तो वो काफी ऊपर है। एक इम्पॉर्टेंट फैक्टर है कि प्राइवेट सेक्टर कैपेक्स में अभी भी हमने जोरों से रिवाइवल नहीं देखा है। नाउ अगर लिस्टेड ग्रोथ और लिस्टेड जो कंपनीज है उनके कैपेक्स ग्रोथ देखें तो वहां में थोड़ा बहुत इंप्रूवमेंट हमने देखा है ऑन अ लॉन्गर टर्म बेसिस। बट लास्ट 2-3 सालों से लिस्टेड कंपनीज या कॉर्पोरेट्स में कैपेक्स के अनाउंसमेंट्स थोड़े बहुत म्यूटेड रहे हैं। पर कॉर्पोरेट जो बैलेंस शीट्स है वो काफी स्ट्रांग है। कॉर्पोरेट लेवरेज यानी डेट इक्विटी लेवल्स आर एट ए 15 ईयर लो। एंड जैसे ही डिमांड में हम रिवाइवल देखें तो कॉर्पोरेट कैपेक्स शायद रिवाइवल हम देखेंगे, लेकिन यहाँ पे अभी भी ट्रेंड्स काफी म्यूटेड रहे हैं। गवर्नमेंट का जो फोकस है लास्ट 2 साल से या 1.5 साल से इन्वेस्टमेंट लेड ग्रोथ नहीं बट मोर होलिस्टिक ग्रोथ बन गया है। इसका मतलब है दैट द गवर्नमेंट इज ऑल्सो लुकिंग एट बूस्टिंग कंजम्पशन। सो इस हिसाब से काफी अनाउंसमेंट्स हुए हैं वेरी रिसेंटली। ऑफ कोर्स द जीएसटी रैशनलाइजेशन, इसके जीएसटी की डिटेल्स अभी तक आए नहीं है, पर व्हाट द गवर्नमेंट इज क्लियरली सेइंग इज दैट दे विल मेक जीएसटी इनटू 2 buckets as compared to the 4 buckets which are there today. And the estimate is that this could add almost 1.5 lakh crore in terms of consumption, which is about 0.3% of GDP. Now, if you look at what the government is announcing on GST, in the budget this year, the government had announced tax benefits, और उस टैक्स बेनिफिट का जो इम्पैक्ट है वो क्लियरली 4 to 6% बूस्ट इन टर्म्स ऑफ इनकम हमने देखा है। तो फोकस जो रहा है अभी गवर्नमेंट पॉलिसी का वो है टू बूस्ट कंजम्पशन। एक और है कि मॉनेटरी पॉलिसी भी सपोर्टिव रही है। इस कैलेंडर ईयर टू डेट में आरबीआई ने पॉलिसी रेट्स को 100 बेसिस पॉइंट से कम किया है। जिनके पास ईएमआईज है, होम लोन्स है, ऑटो लोन्स है, उन्होंने सभी हम सब ने देखा होगा कि हमारे जो इंटरेस्ट बर्डन है वो शायद ऑलमोस्ट 100 बेसिस पॉइंट्स या 1% से कम हो गए हैं। इसका मतलब है कि जो ईएमआई भर रहे हैं कंज्यूमर वो बर्डन भी रिड्यूस होंगे। तो एक तो पॉलिसी रेट्स कम हो गए हैं, बजट में टैक्स कट्स हुए हैं, और तीसरा जो अनाउंसमेंट अभी हुआ है जिसका इम्पैक्ट हम देखेंगे वो है जीएसटी रेट कट का। और फाइनली जैसे हमने कहा कि रूरल इनकम काफी इंप्रूवमेंट हो रही है। पर इसके साथ साथ हमें थोड़ा बहुत ये भी ध्यान रखना चाहिए कि इंडिया में जो कॉर्पोरेट या ओवरऑल बिजनेस ग्रोथ है वहां पे थोड़ा बहुत म्यूटेड ट्रेंड्स हम देख रहे हैं, क्योंकि जीएसटी कलेक्शंस थोड़े बहुत नॉर्मल नॉमिनल जीडीपी ग्रोथ से कम रहे हैं। तो ये एक डेटा पॉइंट है जो स्लाइटली नेगेटिव है, क्योंकि जीएसटी कलेक्शंस in FY26 have been lower than nominal GDP growth, and therefore there is need to boost the overall economy, especially uh, the SME, the mid corporate segment, and the lower income segments. Now, of course, काफी चर्चा हो रहे हैं टैरिफ्स के बारे में। And if the tariff rate is increased to 50%, which is an additional tariff which the US is proposing, then clearly this is a negative for India. Of course, we'll have to wait and see what happens on August 27th. And finally, what is the tariff that India and US settle at. But from a sector perspective, all exporting sectors, which are goods exporting sectors, will bear the brunt, which includes sectors such as auto components, capital goods, building materials, electronic manufacturing, and textiles. It also is negative for sectors such as chemicals, basic industry consumables, as well as aqua industries. Now, two sectors where it is uncertain. One is pharma, क्योंकि फार्मा अभी भी टैरिफ्स जो अनाउंस हुए हैं उसमें इंक्लूडेड नहीं है। पर इस सेगमेंट में अगर टैरिफ इम्पोज हो गए तो ये नियर टर्म नेगेटिव हो सकती है फार्मा, एंड स्पेशली फॉर द जेनरिक प्लेयर्स। However, remember India generic market is very large, and India is a dominant player and a significantly low cost player, and therefore it is not easy to replace Indian pharma companies. So we'll have to wait and watch. And the second impact is on oil and gas as a sector, क्योंकि काफी चर्चा हो रही है क्योंकि India buys oil from Russia, and therefore is there a negative impact if India decides to stop buying oil from Russia? So these are two sectors where the impact is still uncertain. Now we've discussed कि मैक्रो सेगमेंट, मैक्रो पैरामीटर्स कैसे हैं, ग्लोबल मैक्रो, इंडियन मैक्रो, और इस कॉन्टेक्स्ट में लेट्स सी व्हाट इक्विटी मार्केट्स आर डूइंग ना। जैसे मैंने पहले कहा था कि अगर हम कैलेंडर ईयर टू डेट देखें तो हमारे मार्केट्स वर्चुअली फ्लैट है, पर if you look at vis-a-vis global peers on a calendar year to date basis, Indian markets have actually underperformed. यानी कि global markets and emerging markets have actually performed better on dollar terms as compared to India. इंडिया के मार्केट कैप टू जीडीपी रेशियोज आज भी ऑल टाइम हाई पे है। तो यानी कि वैल्यूएशंस थोड़े बहुत इंप्रूव तो हुए हैं, बट अभी भी वैल्यूएशंस थोड़े बहुत एलिवेटेड है। पर इंपॉर्टेंट बात यह है कि जो इंडिया शेयर इन ग्लोबल मार्केट कैप that has fallen from a peak of 4.6% to about 3.8%. And that means that there has been, on a relative basis, correction in the market. I think what is most important is how earnings or corporate earnings are faring. तो अगर हम FY24 के नंबर्स देखें तो निफ्टी के कॉर्पोरेट अर्निंग्स जो डिलीवरी हुए थे वो काफी हेल्दी थे, 20%। FY25 में ये नंबर 3% पे नीचे आया था। और जो हम मार्केट में उतार चढ़ाव देख रहे हैं, दैट इज कोइंसाइडिंग विथ वीकर कॉर्पोरेट अर्निंग्स ग्रोथ। In Q1 of FY26, Nifty PAT growth improved a little bit to about 8% YOY. And our expectation is that for FY26, we should get high single digit to low double digit earnings growth, which is better than what it was for FY25. With second half, especially with the boost to consumption being better and coinciding with the festive season. Now, with this backdrop on earnings, when you look at valuations, markets are trading at a premium to historic valuations. So, if you look at this chart on your left hand corner, you will see that the Nifty 50 trades at about 11-12% premium to its 1 year forward price to earnings. यानी कि if you look at from a long term perspective, valuations थोड़े बहुत ऊपर है। जो मिड कैप इंडेक्स है वहां पे वैल्यूएशन में काफी करेक्शन हमने देखा है, और यहाँ पे जो प्रीमियम है वो अभी 10-11% के बीच में सेटल हो गए हैं। बट स्मॉल कैप वैल्यूएशंस आर स्टिल वेरी एलिवेटेड। द स्मॉल कैप इंडेक्स ट्रेड्स एट अ 45-46% प्रीमियम टू हिस्टोरिक एवरेज मल्टीपल्स। यानी कि जो वैल्यूएशंस है वो अभी भी चीप नहीं है और या अट्रैक्टिव जोन में नहीं पहुंचे हैं, और स्पेशली स्मॉल कैप सेगमेंट में वैल्यूएशन काफी काफी ऊपर है। Just give me a minute. Yeah. If you look at even from a price to book basis, price to book also has shown that multiples are above long term average levels. So इसका मतलब है कि जो वैल्यूएशंस है, इंडिया के वैल्यूएशंस अभी भी हिस्टोरिक एवरेज लेवल से ऊपर है। मंथली फ्लोज जो हमारे डोमेस्टिक फ्लोज रहे हैं, डोमेस्टिक फ्लोज इनटू इक्विटी कंटिन्यू टू बी गुड। सो जो डेटा हम देख रहे हैं, बोथ SIP फ्लोज एंड इवन द लास्ट मंथ डेटा इनटू mutual funds, the data continues to show that DII investments have been strong. On the other hand, FIIs turned net sellers in July, and FIIs have been net sellers in the month of August as well. So April to June काफी जोरों से FII सेलिंग में हमने रिवर्सल देखा था, और FIIs टर्न नेट बायर्स। बट जून के बाद जुलाई अगस्त में हमने FII सेलिंग देखा है, जो कि मार्केट को थोड़ा बहुत इम्पैक्ट किया है। आज if you look at FII holding of Indian equities, that is at a decadal low, which is about 16%. That means this is the lowest that we have seen in terms of FII holding in the last 1 decade. And also impacting liquidity in the market has been lot of promoter selling. तो आपने देखा ही होगा कि काफी ब्लॉक्स और बल्क डील्स हो रहे हैं, और काफी प्रमोटर्स ने अपने स्टेक कम किए हैं थ्रू ब्लॉक एंड बल्क डील्स। Almost $7 billion of promoter selling have happened in CY25, and that has also impacted liquidity in the market. And there are many companies that are also lined up for IPOs over the next 1 year or so. Finally, if you look at the world, clearly the US equity markets have outperformed. And this is surprising because US consumer sentiment is low, GDP growth has come down, and inflation has gone up. But despite that, US markets, especially led by NASDAQ and tech, names, as well as the names like which are linked to artificial intelligence, semiconductors, the US market has actually outperformed. And therefore today, if you look at the chart, the MSCI EM to S&P 500 index ratio is the lowest since March of 1999, which means that emerging market as a pack has underperformed the US market significantly. Now, in this backdrop, when we look at Indian market performance from Jan 2020 to July 2025, there are almost 300 companies out of BSE 500 index that have delivered more than 100% returns, which means that in the last 5 years, for equity markets in India, the returns have been phenomenal. And therefore, when we look at current year, which has been a flattish year or a year of consolidation, जहाँ पे market movement volatile रहा है, but market में uptrend नहीं दिखा है, पर अगर हम 5 साल का return देखें, तो returns have been actually very, very strong. Almost 300 stocks out of BSE 500 have delivered more than 100% return. And that means today valuations are still elevated. Out of BSE 500 stocks, almost 215 stocks are trading at multiples which are more than 50 times in terms of the 12-month trailing PE ratio. ये 12-month trailing PE पे almost 215 stocks are more than 50 times. That means valuations are still expensive. So what we are really saying is that you need to moderate your return expectations for this near term. If you are looking at returns based on only the last 5 year period, then you are possibly in for a disappointment. Now, what we are saying is it's not likely that the markets correct significantly, but the market can time correct and consolidate and be volatile in the near term. So if you look at returns from Jan 2020 to July 25, which is a 5 year period, the BSE 500 returns were almost 17%. But if you look at it for a 20-year period, BSE 500 की returns are close to 11%. यानी कि you should have return expectations which are in line with long term, not just the very near term. इसका मतलब है कि अगर आपका रिटर्न एक्सपेक्टेशंस लास्ट 5 साल के हिसाब से है, तो फिर आपको उस रिटर्न एक्सपेक्टेशन को लॉन्ग टर्म के हिसाब से थोड़ा बहुत नीचे लाना पड़ेगा या मॉडरेट करना पड़ेगा. तो यानी कि आप रिटर्न्स जो आप एक्सपेक्ट करते हैं इक्विटी मार्केट से, दैट शुड बी इन लाइन विथ लॉन्ग टर्म रिटर्न एक्सपेक्टेशंस. And therefore, what we are really saying is, in terms of asset allocation, you should be neutral to equities in your overall asset allocation bucket. Markets में अगर कुछ correction हो, तो use that correction as an opportunity to add. यानी कि अगर market में correction हो, तो keep some gunpowder with you कि उस समय आप जाके अपने equity allocation को बढ़ा सके. In terms of segments, be overweight large caps, neutral to marginal underweight mid caps, and underweight small caps. क्योंकि वैल्यूएशन के हिसाब से आज भी रिस्क रिवॉर्ड लार्ज कैप्स और जो बड़े मिड कैप्स उनके तरफ फेवरेबल है, और स्मॉल कैप में थोड़ा बहुत ध्यान रखिए. बट नियर टर्म में बी रेडी फॉर वॉलेटिलिटी, क्योंकि काफी फैक्टर्स हमें आज भी नहीं पता है कि क्या होने वाला है. एक तो हमारे अर्निंग्स डिलीवरी में काफी डाउनग्रेड्स हमने देखे हैं लास्ट 3-4 क्वार्टर से. ट्रम्प क्या करेंगे वो हमें पता नहीं है. एफआईआई फ्लोज कहाँ जाएंगे वो भी हमें पता नहीं है. तो नियर टर्म बी रेडी फॉर वॉलेटिलिटी. कोई भी मार्केट में 3 फैक्टर्स इंपॉर्टेंट होते हैं. एक तो है अर्निंग्स, दूसरा है फ्लो और तीसरा है सेंटिमेंट. इन तीनों फैक्टर्स में आज हम देख रहे हैं कि अर्निंग, जैसे हमने कहा कि Q1 के अर्निंग्स थोड़े बहुत म्यूटेड थे, पर इंप्रूवमेंट हमने देखा है. सेंट फ्लोज, डोमेस्टिक फ्लोज काफी स्ट्रांग है, बट एफआईआई फ्लोज वॉलेटाइल है, और सेंटिमेंट मार्केट में ऊपर नीचे हो रहे हैं. और इस हिसाब से जो पॉलिसी सपोर्ट मार्केट को गवर्नमेंट के तरफ से मिल रही है वो मार्केट के लिए काफी पॉजिटिव है, बट उसका इम्पैक्ट हम धीरे धीरे साल के सेकेंड हाफ या गोइंग इनटू नेक्स्ट ईयर हम देखेंगे. तो नियर टर्म व्हाट वी आर रियली सेइंग इज बी रेडी फॉर सम डिग्री ऑफ वॉलेटिलिटी. Now, with this, let us also examine one of our flagship funds, which is Kotak Multicap Fund, where you get the power of all in one. Now, ये फंड ऐसा फंड है जो कि लार्ज कैप, मिड कैप और स्मॉल कैप स्टॉक्स के मिक्स है. तो इसका मतलब है दिस इज अ 3 in 1, a power of all in one. Now, why is it important to have a fund which invests across large, mid and small? तो जैसे हम देखते हैं कि हर साल लीडर्स में रोटेशन हम देखते हैं. तो कहीं सालों में हमने देखा है कि लार्ज कैप्स ने आउट परफॉर्म करे हैं, कभी कभी मिड कैप्स आउट परफॉर्म करते हैं और कभी कभी स्मॉल कैप्स। तो इस सॉर्ट ऑफ मार्केट में ये जो फंड है, इट गिव्स यू द पावर ऑफ ऑल इन वन। You have large caps, you have mid caps, and you have small caps. 25% large caps, 25% mid caps, and 25% small caps minimum इस फंड में आपको मिलेगा। यानी यू विल गेट स्ट्रेंथ ऑफ लार्ज कैप्स, मिड कैप्स के जो वैल्यू है, और स्मॉल कैप्स की ग्रोथ पोटेंशियल। तो इफ यू लुक एट द ओवरऑल प्लेसमेंट ऑफ द फंड, यहाँ पे जैसे मैंने कहा कि मिनिमम 25% ईच इन लार्ज कैप, मिड कैप एंड स्मॉल कैप, एंड देन द फंड मैनेजर डिसाइड्स बेस्ड ऑन वैल्यूएशंस एंड मार्केट मोमेंटम द रेस्ट 25 कहाँ पे इन्वेस्ट किया जाएगा। तो इसका जो रिस्क रिटर्न पोटेंशियल है, इट इज समवेयर बिटवीन अ फ्लेक्सी कैप फंड एंड अ मिड कैप फंड। Flexi cap fund, of course, has the flexibility to invest across market cap. And in a mid cap fund, you have to have a minimum of 65% in mid cap. And in a small cap fund, you have to have a minimum of 65% in small cap. In a multi cap fund, the aim is to add value through a multi cap approach with 25% each in large cap, mid cap, as well as small cap. तो इस माहौल में लेट मी इंट्रोड्यूस कोटक मल्टी कैप फंड। ये एक डायनामिक फंड है। यहाँ पे जैसे हमने कहा कि रेगुलेशंस के हिसाब से 25% लार्ज कैप, 25% मिड कैप और 25% स्मॉल कैप है। लार्ज कैप सेगमेंट में अगर हम देखें तो वहां पे आपको स्टेबिलिटी मिलेगी, रिलेटिवली लोअर रिटर्न, बट वॉलेटिलिटी भी कम है। मिड कैप्स में मॉडरेट रिटर्न और मॉडरेट वॉलेटिलिटी। स्मॉल कैप में पोटेंशियल इज देयर फॉर हाई रिटर्न, बट इट इज हायर रिस्क एंड देयरफॉर हायर वॉलेटिलिटी। Now, the remainder 25% will be dynamically allocated between mid, large, and small based on our internal model. Now, what is this internal model? Now, we have an internal model which decides which segment of the market we should be invested in. The model is based on two factors, which is mean reversion and momentum. Now, mean reversion helps in terms of timing of which sector or segment you want to be overweight in, and momentum means how long you will stay in that segment. Yani, if the mean reversion factors are showing कि अभी हमें मिड कैप सेगमेंट से स्मॉल कैप जाना चाहिए या लार्ज कैप से मिड कैप या मिड कैप से लार्ज कैप, that decides the timing of the exposure, and momentum factors tells you how long you can stay in that position. टिपिकली इस फंड में जो नंबर ऑफ स्टॉक्स है वो 60 to 100 के बीच में है। अगर फंड का पोजिशनिंग ऐसा है कि वी गो ओवरवेट ऑन स्मॉल कैप, देन जो नंबर ऑफ स्टॉक्स इन द फंड विल इंक्रीज बिकॉज फंड का जो टेल है वो वहां पे इंक्रीज होगा। यानी कि इफ यू आर अंडरवेट स्मॉल कैप्स, द नंबर ऑफ स्टॉक्स विल बी क्लोजर टू 60। इफ यू आर ओवरवेट स्मॉल कैप्स, द नंबर ऑफ स्टॉक्स विल मूव अप, maybe in the range of 70 to 80. Now, today, if you look at the fund in terms of allocation, large cap is the most dominant part. So, about 38.5% of the portfolio is large cap, mid cap is 31%, and small cap is about 29%. Yani ki the fund is tilted towards large and mid, while small caps, in line with the valuations being stretched, are the lowest among the three segments. Now the fund has a very high active share, which means कि ये fund जो benchmark है वहां से काफी deviation है, almost 83%, 84% active है। तो यहाँ पे जो alpha generation opportunity काफी large है, and therefore the fund aims to capitalize on market opportunities. ये fund बहुत ही actively managed है, और इसका मतलब है कि जो benchmark से divergence के कारण alpha opportunity और possibility is also fairly high. Today, if you look at the sectoral positioning of the fund has the largest exposure in terms of financial services, followed by auto and IT and consumer services. And consumption is also a large part if you include both consumer as well as FMCG. Now, the fund has outperformed the benchmark since inception, and therefore the alpha generation in 2 year, 3 year, and since inception has been significant. The fund has seen some underperformance in the last 1 year. However, over a longer period of time, especially since inception and 3 years, the fund has delivered significant alpha over its benchmark. So if you look at the attribution, the segments that have clearly contributed to the performance have been consumer services, while there has been some amount of negative attribution because of financial services, which the fund is now seeing significant increase in terms of weight. And finally, Devinder, who's one of our senior fund managers, manages the fund, and he has been managing the fund since its inception and since we launched the fund. And he has done a great job in terms of ensuring that the fund generates alpha over a long period of time. So, with this, I'll stop here and then we can open up the floor for questioning.
Sure. Uh, dear participants, we are open for question and answer. You can post your questions by clicking on chat or the Q&A sign that you see, the question mark sign that you see.
There are two questions. Can I take them or
Sure,
shall we
sure,
wait?
sure.
Yeah. So the first question is whether reduced EMI will pour into capital markets by investors or may spend for the festival consumption. So my view is that it can be a mix of both, but my belief is that the target is to ensure that the bottom of the pyramid or the mass consumption or the mass segment gets more in their hands. And therefore, the policy focus is to boost consumption and and it coincides clearly with the festival season. So my view is that reduced EMI does not mean that you suddenly start investing in capital markets. It is very likely, and what we have seen in the past, that reduced EMI, or if you have more money in your hand, typically you will save some and you will consume some. But there is definitely a boost to consumption because of the policy measures that have been seen, both with reduced EMI, um, lower taxes from the income tax side, as well as the proposed GST reduction. Now, for the GST reduction, we'll have to wait and see what are the final rates, because that will be decided by the GST Council only in the September meeting. And therefore, the impact of that will be seen post October. So, that is something that we need to keep in mind. So there's a question also which says, with the likely reduction of GST into two slabs, what will be the sectoral effect and whether it will boost profitability and local consumption? So, if you look at it from a sectoral perspective for GST, some of the segments that get positively impact, auto is one segment that can see significant positive impact, especially the uh, entry level passenger vehicle or four-wheeler segment, as well as the two-wheeler segment. There will also be then a rub-off impact as far as auto ancillaries are concerned. Cement is another segment which can see reduction as far as taxes are concerned, and some parts of consumption can also see a reduction, like, for example, footwear, some parts of apparel, and therefore discretionary consumption can see a positive impact because of the tax slab. But from a sector perspective, two large sectors that can be positively impacted because of reduction of GST into two tax slabs. One is the auto ancillary space, and the second can be the cement segment. There's a question which says your views on the IT sector for the next 6 months. So IT, of course, as a sector has seen significant headwinds because of lower growth, especially where US and Europe is concerned, and the corporate sentiment being impacted, which has meant that IT spends have come down. And therefore, if you look at IT as a sector in the last 6 to 8 month period, the sector has underperformed because revenue growth has been slow. However, our belief is that when you take a slightly medium term outlook on the sector appears to be at the cusp of some improvement. If we finally see macro stability coming back as far as US is concerned, some amount of the deferred spends will also start to come back. If you look at the data that IT services players have been showing, especially where deal wins are concerned, deal wins continue to remain fairly robust, which means that once macro starts to stabilize, some of these deals will start to fructify and will become, will translate into revenue. Near term, the sector will likely see volatility. The other factor and or debate that is going on as far as IT is concerned is AI. And of course, all of us are using AI in some form or the other. However, our view is that for companies and enterprises to use AI effectively, they need to put their data into proper usable stacks, which means data migration to the cloud has to happen. And that is a huge opportunity for Indian IT players. Again, this is a slightly longer term view. If that opportunity starts to come through, Indian ID services will start to see an improvement as far as revenue growth is concerned. So net near term, it can be volatile. Medium to long term, we think that sector valuations have corrected, and therefore there is an opportunity from that perspective if you have a slightly medium to longer term view as far as IT is concerned. Uh, so there's a question saying what are impact of long-term impact on unemployment due to AI adoption, and what are your views on valuations? So as I was saying that AI adoption is still in its early stages. What we are seeing in terms of AI adoption is more uh, very piecemeal, if I might say. Enterprises are using AI in pockets, but they are not using AI which is embedded in their overall enterprise to bring about significant productivity gains. So they want to do that, but it's still not happening. Now, before you actually use AI in a meaningful manner, like I said, you have to ensure that your data is readable to the AI model or AI tool that you're using or the platform that you're using. Now, in order to do that, it's going to take a lot of restructuring of data and analytics to ensure that you get to a point where enterprises are AI ready. So that's going to take some time. Now, will AI replace human beings? I think no. My view is that there will be productivity benefits that will happen. However, there will also be opportunities for work in segments which are related to AI. So, if you ask me 3 years ago, nobody thought about data analytics as a sector. Today, data analytics is one of the biggest drivers of growth for many of the overall, hyperscalers or some of the large companies that are there globally. So I think there will be a need to reskill the older skills sets which are relevant or were relevant in the last decade. Those sets or skill sets will become irrelevant, and those who are able to reskill themselves will be better placed. Now, will it lead to large scale unemployment? It's still too early. In fact, you would have seen that there was a news that a lot of companies that were predominantly relying only on AI are now realizing that AI still needs time to learn, and therefore it will still take some time. And therefore, in the near term, I think there is a lot of opportunity that can come with AI. Over a longer period of time, we'll have to see how we are able to navigate the change in terms of technology. There is a question which says that looking to government hard fighting on tariff with US, how will pharma sector sustain progress for diversion of exports? So, if you look at pharma sector, there are three parts to the sector. One is the US generics piece, where we are exporters to the US markets. The second is the domestic pharma piece, which does not get impacted because the domestic pharma segment continues to grow at about 10 to 12%. And the third is the healthcare piece, which is essentially hospitals and diagnostics, where again growth remains strong. Now, the question is what happens to the exports to the US markets, which is US generics. Now, today, India is the possibly the world's second largest producer of generic drugs and one of the largest exporters of generic drugs to the US. We are also one of the lowest cost producer of generic drugs. And therefore, if US imposes tariff on India on generics, it will actually harm them in a significant way because there is no alternative as far as India is concerned in terms of manufacturing of generic drugs. So you can't just shift manufacturing from one place to the other very easily because first you have to set up manufacturing capabilities. Those have to be inspected by the US FDA, approved by the US FDA, and the cost of drugs will typically go up. So ultimately, if the US imposes tariffs on US on generic drugs, the cost of drugs to the consumer will go up. Now, one way that many of the pharma companies can offset this is many companies have manufacturing bases in US and they can manufacture there instead of manufacturing in India. But even then, the cost of drugs to the final consumer, which is the US consumer, will go up. So, which is why we have not seen the tariff being included as far as pharma is concerned. We'll have to wait and see. But for pharma sector, as of now, it has been kept out of the tariff umbrella. And I think it's going to be a difficult task for the US to impose tariffs as far as in generic drugs are concerned. But again, you never know. View on the rupee. So the rupee view, our rupee view is that rupee continues to depreciate at least for some time because of the tariff related uncertainties. What we have seen is that the dollar has weakened against many global currencies, but of late the rupee has been weakening as well. So therefore, I think the biggest challenge for Indian currency is the tariff related issues. However, remember the forex reserves that RBI has is significant, and therefore there is ability of the RBI to combat volatility. So I don't see the rupee depreciating or falling off a cliff, but the trend or the bias of the rupee will likely remain depreciating as compared to what it was earlier. Now remember, if the US imposes tariff, it is in our best interest to also have a depreciating currency because that makes our exports more competitive. And therefore, I think from an overall policy perspective as well, the bias will be for the rupee to be on the depreciating side as compared to appreciation. Okay, there is a question on, as you suggest, data should be on cloud to use AI meaningfully, and this will require large scale data center infrastructure and second order effect. Where do you see capex growth in energy and data infrastructure in the next 5 to 10 years? And when will industry see any ROI? So I think you're right. There has to be a significant amount of investments that go into data infrastructure, data centers. And in fact, we were just working on, to estimate how much of capex will go into data centers. Globally, we've seen that today capex as far as data centers are concerned is possibly the highest among various industries. And that means that the requirement for energy also goes up. And our view, therefore, for power as a sector or energy requirement as a sector is that while we are seeing this near-term fluctuation because of weather and rainfall being excess and therefore power demand coming down, structurally demand for power is likely to stay elevated. Now, when will the industry see any ROI, especially where the data centers are concerned? I think so far it will still take some time because we are still in the capex phase and a lot of the work is going on in terms of setting up these data centers. This is going to continue for some time. In India, unlike in the US or unlike globally, we don't have any plays which are listed as far as pure data centers are concerned. And therefore, the only way to play this entire AI shift is through IT services and IT services players. There, the capabilities differ, and therefore, you will have to pick stocks where companies have been able to develop capabilities to tap the AI opportunity. But so far in India, we don't have any pure play data center player which is in the listed space. Mm, okay, there's one more question which says, as China is extending friendly ties with India, other wars with Israel, Iran, Thailand, Cambodia, and hold, what would be defense manufacturing stock position in the shorter period? So very difficult to comment on the short term because, of course, defense as a theme is something that is structural in nature. We think that India will continue to increase spends towards defense. One will be, of course, focus on indigenization of defense spends and even globally to acquire defense capabilities. I don't think that spends will come down. So this is a long-term structural theme in our view. Near term, you may want to evaluate stocks based on valuations. Some of these stocks had moved up considerably and therefore valuations had become expensive. But I think from a theme perspective, longer term or medium term, I think the continuous spend as far as defense goes from a budgetary perspective will continue. So, near term, you may see some consolidation because some of these stocks trade at multiples which are expensive. But if you look at medium to long term, the overall theme as far as defense manufacturing is possibly fairly intact. There's a question saying your view on consumption side of the economy. Don't you think we are long past the double-digit growth? Yes, definitely. Consumption has been lagging in terms of growth, and I think that has been the challenge for India. So far, if you look at last 5 years, The government spend has been tilted towards investment and capex, and the government and budgetary support towards consumption has been missing. So, therefore, you've seen that private consumption expenditure has come down. And today, if you look at consumption growth, that has been below trend. However, now I think we are at a cusp of revival. Incrementally, the government is clearly spending more on consumption. The focus of policy has moved from just being investment led to more balanced growth with consumption also in the picture. The last few policy changes have all been focused towards bringing consumption back on track. The second most important fact, if you look at data, rural consumption, which was lagging for the last 5 year period, that is now starting to show up in terms of improvement. If you look at the AC Nielsen data, which comes out on a monthly basis on FMCG, that data shows that after a long time, rural growth is now higher than urban growth. And in fact, all the FMCG companies seem to suggest again that rural data or rural demand has seen improvement. Now, will we go back to a double digit growth? Maybe not in the near term, but policy push is clearly towards consumption, which means consumption growth, which had become very, very low, is likely to improve from here on. And within that, our focus is more towards consumption at the mass segment, which means two wheelers, lower end four wheelers, some amount of consumer durables, retail. So, last 5 years for India was led by premium consumption growth. And now, this leg of consumption is likely to be more middle income to mass affluent or mass segments rather than just premium or higher end consumption. And I think that is the change that is taking place because policy is likely to move and is moving towards supporting consumption in that pocket. So whether we will go back to double digit growth, very difficult to say, but whether there will be an improvement, the answer is clearly yes. And improvement in sectors which cater to mass consumption, that is something that we do expect. So there's a question which says, is AI and IT industry valuation at the cusp of correction like dot-com correction in 1999 and 2000? No, so for, of course, for Indian IT companies, unlike uh, 2000, where multiples were crazy expensive, today Indian IT companies are trading at valuations which are lower than their last 10-year average history. So I don't think that there is going to be a correction for Indian IT services players the way we saw in the dot-com bubble. In fact, Indian IT players, in terms of valuations, are lower than what their history has been. Now, the bubble, if you ask me, can be, in some of the larger companies that you have seen in the US. So, if you look at, for example, the Nasdaq or the S&P 500, there clearly the improvement or the outperformance that you have seen of indices in the US have been led by, as they are called, the Magnificent Five or the Magnificent Seven, which are these companies which are part of the entire AI boom that you've seen in the US. Now, whether these companies see a significant correction, I think as long as earnings keep coming, these companies' valuations hold up. So if you look at S&P 500 earnings today, the top 7 companies or the top 10 companies contribute significantly to the earnings of the S&P 500. If you look at S&P earnings X of the IT industry, S&P earnings are actually significantly lower. So the issue is, as long as earnings keep coming, the valuations hold up. If earnings falls off, then valuations will correct. But I think in this context, Indian IT players are actually fairly well placed because our valuations today are significantly lower even compared to the last 10-year history. So we are not trading at high multiples like some of the AI players or the hyperscalers are trading at, where the global markets are concerned. So yeah, I don't think we are at that kind of a situation like the dot-com bubble of 2000. Yeah, I think I've answered.
Yeah. Yes. So, uh, we'll take the last question for the day. So, with GST reforms coming in, do you see any particular sector wherein the risk reward ratio is very high?
Yeah, so I think like I said, I think the entire focus of GST is to make goods and services affordable to the mass income segments, and therefore mass consumption boost is what entirely the focus is. The sectors that get positively impacted because of the GST tax rationalization are likely, as I mentioned, the auto segment, especially the two-wheeler segment or the lower end of the four-wheeler segment, where the premium cars are concerned. Of course, there will be possibility, especially the very high-end luxury cars, there will be a possibility of higher rates. That's something that we'll have to wait and watch for. But for the two-wheeler segment and the four-wheeler segment, there is likely to be a positive outcome. And therefore, auto ancillary players who are also catering to the two-wheeler segment and the four-wheeler segment get positively benefited because of the same. Now, the other segment that can see a positive rationalization can be the cement space, where taxes can come down. There is also likelihood of some parts of consumption where taxes can come down. FMCG today, most of the the pure FMCG buckets will not see any change in taxes, but there will be some segments within the FMCG and the discretionary consumption bucket which can see tax changes. Footwear is one segment where taxes can come down significantly. Some parts of retail apparel also may see changes as far as taxes are concerned. So I think overall, if you look at the entire bucket and what the thought process is, that you need to have a situation from a policy perspective that boosts consumption. And that consumption boost has been now coming in various forms. Started with the budget, where taxes were cut for the lower income segment. Then it started with, then it was followed by the monetary policy, where essentially the RBI has been cutting rates, and 100 basis points of rate cuts in the 8 months is a very, very large rate cut. And the third, of course, is now the GST rationalization. So, net, our view is that as far as discretionary consumption goes, this bodes well. This also coincides with the festive season, but we'll have to see whether the demand sustains post the festive season, which is in October, November, December. And this GST impact actually will be felt not now, but it will be felt in October. So, that is something that you will have to take into account. It is not today because the GST Council has to meet and then they have to agree on the rates, and that will happen only at the end of September. And therefore, the impact of that will come only in October.
Sure. So before we conclude the call, Shibani, any last thoughts
Yeah.
from your side, and then probably we can conclude the call.
Sure. So I think, Indian markets have actually, if you look at, while we have underperformed on a relative basis, I think the macro parameters are fairly strong. As I said, any market moves on three factors: earnings, which is an outcome of macro as well as corporate earnings. The second is flows, and the third is sentiment. Now, flows from domestic perspective remain strong, and there's nothing much that we can do as far as FIIs are concerned. But remember, India's valuation relative to the emerging market has come down to long-term averages, and therefore the premium that we were trading at has come down to long-term averages. So valuations relative to EM have corrected. The second part is earnings, and I think for Indian markets, while the policy focus has been strong and the policy boost has been strong, corporate earnings need to pick up. Now, first quarter, we have seen an outcome where Nifty has given about 8% earnings growth. Now, the hope is with all the policy changes, this earnings trajectory should start to improve from here on. And therefore, we end with about, say, low double digit earnings growth for FY26. Markets and corporate earnings go hand in hand. And therefore, if earnings picks up, markets will follow. In the near term, of course, there is significant event risk and uncertainty which we will have to navigate, which is why we are saying that in the near term, you need to moderate your return expectations and use market corrections to build positions as far as equity is concerned. Of course, we are all equity investors for the long term. And from a longer term perspective, our view on markets remains fairly positive. And therefore, use volatility as your friend in order to build positions for the longer term. And yeah, so I think hope for the best and stay invested. Thank you so much.
Sure, Shibani. So thank you everyone for joining in. Thank you, Shibani, for taking out the time and taking us to the market outlook and the fund update. So any confusion investors has, in which market cap they have to invest, we have a multi-cap fund Kotak
Yeah.
multicap fund, wherein no-brainer you can put your money, and there is a fund manager backed by the research team to take the investments, placing the investments in the right cap. So once again, thank you, and a happy weekend to everyone.
Thank you so much. And